Should you consider going for the JPMorgan NASDAQ Equity Premium Income ETF, ticker symbol JEPQ? Well, to cut it short, the answer is a big yes. In this video, we'll go over everything you need to know about JEPQ, such as what it is, how it generates cash flow, and what type of investor this is a good fit for, and then everything in between. JPMorgan has two ETFs. The first is the JPMorgan NASDAQ Equity Premium Income ETF, JEPQ, and the second is the JPMorgan Equity Premium Income ETF, JEPI. They are very similar in certain ways and with how they generate cash flow, but they are entirely different investments. We'll talk about that shortly. According to JPMorgan, this investment is intended to provide current income while maintaining the potential for capital appreciation. And they generate income by selling options and investing in US large cap growth stocks in order to deliver a monthly income stream from associated option premiums and stock dividends. They also say that they want to provide a large part of the returns of the NASDAQ 100 index with less volatility. JEPQ is extremely similar to JEPI, but has an entirely different underlying portfolio. As stated here, they are looking for returns associated with the NASDAQ 100 index, whereas JEPI works with the S&P 500 both with the options that they sell right here and also with the underlying portfolio, which despite having only 123 holdings, attempts to replicate the underlying investments in the S&P 500. Here is how the JPMorgan website explains their investment methodology. First, we have the underlying equity portfolio. They develop a fundamental framework by combining data science techniques with 40 years or more of JPMorgan's proprietary data, for example. In other words, they have an underlying portfolio that aligns with the NASDAQ 100, but they don't own all 100 NASDAQ 100 stocks. You'll see they only have 83 different holdings as of October 19th, rather than 100 as in the NASDAQ 100. And some of the top investments here include Apple, Microsoft, Google, and Amazon. Because some of these assets pay stock dividends, the underlying equity portfolio generates some cash flow and capital growth. And the options overlay generates extra cash flow by selling call options that are 1 month out of the money. These call options are made to give investors a way to make money while also getting a piece of the upside with less risk. Now, right off the bat, they're kind of unclear when they talk about 1 month out of the money call options. They do give us 1 month options, but they don't tell us how far out of the money they are. We just don't know how much out of the money these options actually are because they are out of the money. And I looked through all of the investment documentation they provide, the prospectus and the annual report, and none of those documents indicate exactly what percentage they are selling out of the money, which can mean a lot of different things and does allow for additional capital growth. JEPQ and JEPI, for that matter, handle the options writing procedure differently than all other forms of dividend income ETFs that use options. Many others, notably Global X funds, will simply tell you what options they use and what the strike price is. Whereas with JEPQ and JEPI, if we look at the portfolio, we'll notice that these investments here, the NDX4, NDX3, 2, 5, and NDX6, happen to be the NASDAQ 100 index. So these are clearly the options that they're writing, but what these are really called are equity-linked notes. And I learned more about that right here in their summary prospectus, under the fund's main investment assessment strategies. It talks about how they reached their goal of making money now and making their money grow by putting together a portfolio of equity securities based on a NASDAQ 100 index and actively managing it. And secondly, through equity-linked notes, which are selling call options with exposure to the benchmark. They give you more information down here where they say that ELNs are owned by the funds and are structured to use a covered call strategy and have a short call embedded within them. So instead of writing the options and holding them in the portfolio, they have a completely different investment. These NDX underscores these equity-linked notes that are writing options, and they own those linked notes instead. So they still capture all of the option premium, they just do it in a different way. The simplest way to think of this is that JEPQ has a long equity portfolio, which means that they hold specific stocks that are included in the NASDAQ 100 index. Not all 100, but a selection, and that's where the whole thing applied. In addition to their long stock portfolio, they use an option strategy in which they sell out of the money 1 month call options that they own in their equity-linked notes. In addition to the monthly dividend that they get from the companies in their portfolio, these options also bring in cash flow. Their dividend yield as of December 19, 2022 is 9.32% per share. The high dividend yield is due to the part of the fact that many covered call ETFs such as QYLD, RYLD, JEPI, and JEPQ will simply have higher dividend yields due to this additional option income. But right now, market prices are low, and whenever market prices are low, dividend yields are also high. One of the primary characteristics that JEPI and JEPQ investors will like is the payment of monthly dividends. This fund was started in May of this year, so it doesn't have much history, but we have had payments from June to December. The fund does have an expense ratio of 0.35%, which is lower than the expense ratios of many other dividend ETFs that trade options. And before we continue, don't forget to subscribe to the channel, hit the like button, and turn on the notification bell to be notified every time a new video is uploaded. Let's check how JEPQ has performed year to date compared to both the JEPI and the QQQ, which is the NASDAQ 100, to see how that volatility plays out. This is one of the important areas covered by JEPQ and their option overlay. They provide investors with a piece of the upside while also reducing volatility. Here's a chart of JEPQ and QQQ from the beginning of May 2022 for both investments up until today. The dark blue line is JEPQ and the lighter purple line is QQQ or NASDAQ 100. You'll note that there is less volatility in this chart. You'll see that the lows in early May and June were lower with QQQ than with JEPQ, and when the rebound began, we observed a considerably higher high with QQQ. We expect QQQ to be more volatile, and if you keep both investments for a long time, QQQ should be better than JEPQ. Although whether you reinvest your dividends in JEPQ will affect the fund's long-term return. You can see that they are nearly identical year to date, with JEPQ using 18.1% and QQQ losing 18.9%. When we look at the past performance of the JEPI and the S&P 500, we see that they are somewhat similar. However, JEPI has been less volatile over time than the S&P 500. What kind of investor is a good fit for JEPQ? Keep in mind that this type of investment is meant to give you a lot of cash flow now and some capital growth in the future. Investments like QYLD, RYLD, and XYLD from Global X are not a strong fit for long-term growth investors because they cap growth and focus on extreme levels of cash flow, which damaged QYLD and those other stocks' overall share prices. JEPI hasn't had this problem. Their dividend investments continue to generate more cash flow than other types of dividend investments, and they also help the market grow. The options traded in both JEPI and JEPQ are out of the money options, so you might make a case for holding this type of investment even if you're looking for long-term growth. Though I still strongly recommend holding other growth investments such as S&P 500 or QQQ for the long term if you want to keep things simple. If you're halfway through retirement and want to start turning some of your investments into cash flow investments while still participating in some of the growth, JEPI and JEPQ investments are likely to be a better alternative for you. Now, full disclosure, I do not own JEPQ, but I do own JEPI and I set it to reinvest dividends. It's been the best performing of my covered call ETFs since I've been using the strategy starting in 2021. I have a portion of my stock portfolio invested in income dividends like these as well as growth dividend stocks. I hope you learned something from this video today. Make sure you leave your thoughts in the comment section below. Share your thoughts on this dividend stock or any other dividend stock you're interested in hearing more about. As always, hit the like button, subscribe to the channel, and turn on the notification bell, and I'll see you in the next video.